Cryptocurrency, a form of blockchain technology introduced into this world as a way in which transactions can be made through the digital dataverse. The emerging technology has allowed for the use of a decentralized platform that embodies multiple forms of currencies such as coins that range in all opportunities of investing, diversification of one assets, and easy methods of transactions without the need for approval by the government. From well-known coins like Bitcoin, Ethereum, and even the meme coin like Shiba Inu, the emerging cryptoverse has dramatically impacted many lives in today's society. But the real question is, should you own cryptocurrency? Well, let's dive into the historical context of crypto. Cryptocurrency first started in 2009 when Bitcoin was launched by an unknown computer programmer named Satoshi Nakamoto. The whereabouts of this masked programmer is unknown, and the identity of the source of cryptocurrency is still unpredictable to tell how exactly such blockchain technology was created. In evidence to this, the price of Bitcoin when launched to the world first started at precisely 0.0009 cents per Bitcoin when a transaction was made on PayPal in 2009 by a student who sold over 5,050 coins altogether. It was the first transaction made and gave value to the coin, making it one of a kind. These transactions made using Bitcoin were slow, and the purchasing and selling of the coin took until 2010, where emergence of Bitcoin started to gain attention from the rest of the world. In fact, when an individual named Laszlo from Florida purchased 2 slices of pizza for the value of 10,000 Bitcoin, word broke out and Bitcoin earned a name of actually having its first ever real global purchase. It's deemed one of the most expensive orders made for slices of pizza, and its value today as being nearly $16 billion at one time. With next to nothing, Bitcoin finally reached the value of $1 in 2011. By June of 2011, the price of Bitcoin 30x its value, but this would soon fall back down as the coin was still unpredictable within the markets. In 2020, the pandemic broke out, and a rise in inflation led to the Fed printing more money, which introduced stimulus. This increase in purchasing power led to the market for tech stocks to rise, and so did the market of cryptocurrency as Bitcoin grew to an all-time high of nearly above $68,000 in November. Although as the economy continued to fall apart in 2021, the all-time high of Bitcoin has not been reached till this date in 2023. With that being said, the Fed continues to fight off inflation and increase the rise of interest rates, which in turn has decreased the overall amount of investments, borrowing, and demand for Bitcoin entirely. In fact, its value today as of September 27, 2023 is a little below $27,000, but this price fluctuates consistently within the market, and investors could only hope to see Bitcoin at its all-time glory one day. With that being said, is cryptocurrency considered a safe investment still? Well, in light of it being very volatile, the simple answer is no. Cryptocurrency is an unregulated system of transactions that give no guarantee to an investor's assets. For example, imagine this: you're winning at life, making tons of money, investing in crypto, but all of a sudden the exchange you are holding your coins on goes bankrupt. That exchange takes no liability in your assets, and you could possibly lose all your capital within the currencies you own. This has happened before to investors from the well-known FTX scandals. What was FTX? Well, it was a very popular exchange worth billions once, now considered a huge scam that costed at least over $1 billion in assets to go missing. Popular celebrities who endorsed the exchange and provided publicity towards FTX lost millions. This includes individuals like Tom Brady, Stephen Curry, Kevin O'Leary, and countless of others who had much more to lose, who weren't as fortunate as celebrities were. Now, who was behind this construct of mismanagement of funds? Well, it was none other than the CEO Sam Bankman-Fried, who at the time was considered a menace of society. He in turn allowed for high amounts of money to get withdrawn with little to any liquidity, and caused the downfall of cryptocurrency platforms and many of its assets during the time. In consideration, Sam Bankman-Fried also used some of the capital from FTX and its customers to borrow and fund his trading company Alameda Research. Both the Sam's companies FTX and Alameda would fall along with individuals' assets. Much more desire for regulation by the world came from this, and with this, Sam Bankman-Fried is facing charges, but in consideration to this unlikely event, many other exchanges left could also be a scam hiding under our very noses. In spite of this, the potential for loss that could come from hackers is also a risk hazard for investors, as these criminals have shown time and time again how capable they are of stealing many assets from these exchanges. In fact, a couple hacked and stole over $4.5 billion of cryptocurrency in 2016, and this came from a cyber hack that affected 36% of assets by an exchange conducted by Bitfinex. They were only caught as law enforcement finally tracked down these criminals in New York due to a purchase of a Walmart gift card. Over $3.6 billion in cryptocurrency was seized by the government, but this goes to show how risky crypto can be. On top of this, volatility can be scary as you, the investor, can dramatically lose everything within an instant. In fact, seen in May of 2022, the third largest cryptocurrency thought to have been one of the most stablest coins that could not fall collapsed and lost all of its value in a matter of 3 days. This coin was Terra Luna, and individuals who owned the cryptocurrency lost their entire savings as well as tons of money necessary to keep a living. Over $50 billion was shredded down to a mere nothing, and this brought word to crypto enthusiasts. In light of these occurrences, is it still possible to get rich off of cryptocurrency? In the other manner, yes. In terms of risk in gambling one's money, then yes, it is possible to invest in today's crypto exchanges and generate a wealth unimaginable, but the cases in which this can occur is highly skeptical and very unlikely. You see, the chances of catching the next Dogecoin or riding the next meme coin like Shiba Inu is next to rare. Yes, cryptocurrencies are made continuously and almost every day, and you can see a new coin entering the popular exchanges, but in reality, the chances of this coin being the next Bitcoin or Ethereum is highly unlikely. That is, the chance of being rich was there in the past when Bitcoin or Ethereum was considerably cheap and affordable, but at today's prices, attaining one Bitcoin isn't even worth it, and the probability of finding the next coin going to the moon seems impossible. With this, the opportunity cost of trading comes with high risk to reward ratio, as high fees are charged from these exchanges, and this doesn't even consider the cost from taxes once profit is made. So is the reward really worth it for trading? The simple answer is no. But even then, if you still choose to invest in cryptocurrency and understand the risk involved, here are some platforms that you could use to purchase and sell crypto on. The first is Coinbase, a platform designated as one of the most popular cryptocurrency exchanges that allows for you to invest in coins directly with USD. There are more than 30 plus coins on the exchange, and there are opportunities to earn free rewards with interest tied on your USDT. Pros include a variety of coins to select from, effective security and safety for assets, and very simple to use platform. The cons, on the other hand, include fees higher than average unless you're using the exchange's separate platform used for trading, mainly known as Coinbase Pro. Users have no right to control over their private keys in the crypto wallet, and the ability to acquire more crypto introduced is slow by the exchange. Now, a second platform is Uphold. Uphold offers the ability to trade directly from coin to coin without having to continuously revert back to Bitcoin or Ethereum when trading currencies. With this, Uphold allows for the trading of a variety of coins such as popular coins like Doge and XRP. Pros include a legitimate cost structure, a variety of cryptos to trade, and even stocks. The platform is directly accessible through app and or desktop. Cons include difficult to use application, and customer service has been reported to be low. The third exchange is Gemini. Gemini, one of the very first exchanges in the cryptoverse, is by far a popular platform that involves almost the majority of all assets within cryptocurrency. With this, Gemini contains a variety of well-known coins and does pay a fine interest for certain assets based on qualification. Pros include an easy-to-use app and or platform, a large exchange that provides credibility, and strong support for higher levels of assets. Cons include methods for depositing and making payments which are limited, and a mixed customer service review. The fourth platform is Binance. Binance is a sophisticated app that provides one of the best trading platforms for cryptocurrency. However, as a foreign exchange, it provides limitations for those using the platform while living in America. Pros include a great level of coins and tokens, transaction times are very fast, and there are low fees in comparison to other platforms. Cons, on the other hand, include limited variety of coins when using the US version of the platform. Availability in the US can range in only certain states, and customer service is limited. The fifth and final exchange is Crypto.com. Crypto.com is a fast-growing exchange that offers over 90 cryptocurrencies with 50 of the coins in the United States. The exchange is highly supported by the United States and its customers, while offers great rates and potential for investors from the cryptocurrency saving accounts. Those include great level of coins and tokens to trade from, an ability to acquire interest weekly with a crypto savings account, and a linkable debit card to the exchange. Cons include fees that can be complicated, only app-based platform, and customer support is limited. Overall, in my opinion, it is still too early to tell the future of blockchain technology and its risk in comparison to cryptocurrencies today. In consideration, an investor must always be prepared for the worst in any level of investing and acknowledge that losing everything can be possible, especially in the world of holding cryptocurrency. However, this is not financial advice and is strictly only opinions, as financial media seeks only to provide information for educational purposes. and it is up to the investor to either seek financial advice from an actual advisor or apply his or own research. All that being said, make sure to like, comment, and subscribe below.